Hello guys, good morning and welcome to this trade reviewing of the week, trades that happened through London. I will be making the introduction in just a second, so don't worry about it. But I do have to clarify a small thing before actually getting on in the video so I don't get some stupid comments on the commentary section. So the trades showed on this video are not trades that I took. These are trades that could have been taken advantage of by applying the 5 steps. Right? It's 5 steps that I've taught on a previous video, again inspired by ICT. So I do mention through the video which trades I took, which trades I didn't take, where I took them, why I took them, why I didn't take them, and so on and so forth. Right? So before commentating anything related to that, just watch the video first. Now without further ado, enjoy the video and talk to you on the next one. We're going to be going over a couple of trades that happen in a very lovely manner throughout both London, well actually only through London Kilsum. That's what we'll be looking at today, because I don't know about you, but me and the private community, we actually did manage to get some really clean opportunities through New York. No opportunities from my point of view actually showed up through New York on either of the sessions, and as you'll be able to see on Thursday, we actually do get an opportunity, but sadly price doesn't fulfill step 5, so for be able to win, nothing that I could have actually taken advantage of, right? So let's jump in straight onto Monday and see if actually we had something to take advantage of. And let's replay. There's a shortcut for it. Maybe not. Well, let's just ignore it. So this is London. London is going to be a little bit green bucks. And this week bias was a little bit complicated. I was expecting potentially bearish prices, but as we were able to see, we did see higher prices a lot throughout the week. But then just price turning around and actually continuing bearishly. And we have a clear run on buy-side liquidity about that high. I don't think I would have considered that high as very important. This couple of equal highs is a little bit better, right? Price takes that liquidity. That'll be step 1. Step 2 will be market shift and fair value gap in the 5-minute, right? Maybe we get something in the 15. Let me actually check just in the case. No, not in the 15. So 5-minute market shift, fair value gap. We have a tiny fair value gap on that, which is at a much better premium and discount. Well, in this case, premium prices, right? I'm gonna have to change the color of this one. To have another one, price trades back into it. So this is step 2 and 2, and now we'll have to check lower time frames for step 3, sorry, step 4 and 5. So price mitigates the area. First reaction is nothing. Second reaction creates a tiny bit of a low. So market shift, we are either considering this market shift or this one. I think I would have considered this one. Makes good enough sense, and that would have been an entry. All right, that's basing ourselves on the 5 steps. And as an example, I did the analysis as I just did it, because I hadn't actually seen this price action. I didn't see London through, I don't think Monday and Tuesday. I do think I saw it on Wednesday. Thursday I actually took a trade, and Friday there was a really clean opportunity. And as you can see below this low, we're actually getting pretty close to 4R. So 4.08 to cover spreads and commissions would have been more than enough for me to get out as a target, or I would have gone as far as that, right? Beautiful 5R. We have the 5 steps. I don't like the fact that the fair value gap is somewhat tiny and price actually trades pretty deep into it. But overall, it's a pretty good opportunity with the 5 steps and everything that we look for, right? Simple as that. So, lovely trade. Yeah, that's one of the trades. Pretty clean one through London that we had on that day. Would have been complicated again to fair value gap, but honestly, nothing that we should have avoided, in my opinion. We're not going to talk about New York for most of the days. Actually, none of the days. I just want to go through London. New York and London will be just for the private community. Let's see London. Let's see what it does. So like that. So months. This is Tuesday. Of course, we're kind of thinking about various prices, but we need to get we could see bullish prices due to what we had on Monday. As you can see, Monday ended up being bullish. This could be a retracement as it ended up being. So thing is that we have confluences to go both sides, so we do have to remember that. So bullishly, we have the 5 steps on this fair value gap. I don't know if the 5 steps, but maybe we got the 5 steps. And bearishly, we have the fact that the 5-minute took this buy-side liquidity. This buy-side liquidity, cool. aggressively moves lower, market shift on this low, there's no fair value gap. And if we wanted to counter this one, there's no fair value gap either. Right, so that means that even if price trades back into this, I can't trade it. On the 15-minute, as an example, there is a fair value gap, but the 15-minute doesn't take buy-sell liquidity. From the 15-minute, you can see the liquidity that it's taken. So for me, that's not something that I can use. I cannot use that 15-minute fair value gap. Reason why I would have avoided this little bit of price action, which would have led me to a loss, and another opportunity that we get through here. But here's the thing. Now we have another round of buy-sell liquidity. 15-minute fair value gap being mitigated. Just keep in mind that I'm saying the 15-minute fair value gap. A fair value gap is a good confluence, but I'm not looking for the lower time frame execution inside that 15-minute fair value gap due to the simple fact that, again, that 15-minute fair value gap wasn't created after taking buy-sell liquidity in this case. So for me, that's not a fair value gap that I want to be trading. It's the confluences that I look for that basically make me miss out on this opportunity here, and maybe even what happens here. But here's the thing. We have another round of buy-sell liquidity, have a market shift, right? And we have a tiny bit of a fair value gap on which we get a very minor mitigation at first. Minor, but again, enough, right? But as you will see in the lower time frames, we don't really get much to do. So now let's look at the lower time frame on the bullish side and the bearish side, as we will look in already. Keep in mind that we are waiting for step 3 on this one, and then 4 and 5, and step 3 and 4 and 5 on this one as well, right? So sell side liquidity, market shift, fair value gap, lower time frame, or price itself just trades back into it. So you can see it goes aggressively higher. We have a market shift, we have a fair value gap, and this is a trade that, as an example, could have ended up in a loss if we were trying to buy. How could have we avoided this loss? Which I talked about it. I didn't talk about it. How could we avoid it? If we're expecting this to be a retracement, we could have waited for price to actually retrace down to the 50, which I don't remember if it does. And it does. Yeah, it does. As you can see, it takes sell side liquidity, starts going aggressively lower. Sorry, not takes sell side liquidity. Mitigates 50%, takes sell side liquidity, starts going aggressively higher. So we get the 5 steps, in my opinion, a really good confluence. How could we avoid the loss? We could have avoided the loss due to the simple fact that price is reacting to a 50-minute fair value gap, right? And from here, as you can see, price is coming quite aggressively to the downside after a nice run of buy-side liquidity, 50-minute market shift, 50-minute fair value gap, if I remember correctly, we get. Otherwise, we have a 5-minute fair value gap. Either way, price starts going lower, and we have a pretty set bearish trend at that point, right? So that's one of the reasons why we could have avoided it. I don't think I would have avoided it, if I'm going to be honest. So it could have been a loss, pretty simple. And that'll be a loss minus, of course, keep in mind, let's actually put this. So we got plus 4R, I think I would have gone for on Monday, minus 1R on Tuesday so far, of course, keep that in mind. And let's see how the rest of the days go. So we take a loss on this one, price goes aggressively lower. This change in direction, as you can see, I don't see any fair value gaps that I could have taken advantage of. Nothing that I would have been interested due to the fact that it goes pretty deep into the area. Already kind of invalidating the fair value gap, although the fair value gap until the low isn't broken, it is not invalidated, right? So it is something that we could have bought by around these areas if we got the confluences, but it's something that I would have not been interested in. 5-minute fair value gap is mitigated on the mitigated or price trades back into this fair value gap after mitigating into the bullish fair value gap, creating that entry, right, the bullish entry. So we could have avoided that. I don't think I would have sold from here. Reason why is because we're pretty low into the move. We look at it from this perspective, right? We're below premium, so it's not ideal at a price to be selling in this case. So I think that I could have avoided that loss, but let's be aggressive and say we actually take this loss, right? That means that we're taking 2 losses today. Now, price trades back into the fair value gap, takes buy-side liquidity, and we have, this is outside of London kill zone, right? This is pre-New York, or what I used to call pre-New York. So let's see what it does. Also, we could have avoided, if we're not going to be trading after London, this is a loss that we're avoiding, right? If we are trading about after London, trading the pre-New York time, this is a loss that we're taking, and also the trade that happens here could have been another one. As you can see, we see liquidity being taken right there, and also there's a little bit of a trap here because it gets into the area, starts going aggressively lower. we don't have a market shift, but we do see the fair value gap. Is this a trade to take? No. For me, I wait for the 5 steps. You already know my 5 steps. Price doesn't give those 5 steps here, and it is what it is. There's no entry. Could if I try to take this just because fear of missing out? Definitely. It would have been a loss. That would have been an unnecessary loss that we just don't need to take. Don't need to take, don't want to take, because it can affect us psychologically. And it's just something that we try to aim not to get affected by. Now, run and buy sell liquidity, aggressive move lower, market shift, fair value gap. We have market shift and fair value gap, which is what we look for after step 3. This is the mitigation. What are we targeting? We have multiple things to target. So let's go one by one. I'm looking always at the very least for 4R. Below this low, we get a nice 3.71. So would have been more than happy by circling that up to, running that up to 4R. And that would have been a lovely trade to take. Probably with partials and everything, around a 2.5% profit, maybe. And lovely trade. So that's another one. There's a 4R that we would have taken on Tuesday, meaning that we took 2 losses and 1 win on this day specifically, right? In my opinion, we could have avoided this one. My opinion, we could have also avoided this one. Not sure if I would have. Thing is that we're looking for the 5 steps. We're looking at what happened with the 5 steps through London through this entire week. So we're going to be taking everything that we see that has the 5 steps, right? Ideally, we'd have a daily bias. In this case, we don't have a clear daily bias up till Thursday. Thursday is when, in my opinion, the daily bias does become a little bit more clear, more easy to understand, but at the time we don't. So that's what we have for our Monday, for our Tuesday. Being fully honest, if I begin Monday with a 4R trade, I'm not trading through the rest of the week, so it is what it is, right? This week for me, I didn't take, oh shit, I didn't trade London. I traded only Thursdays London, yeah, with paper trading, and on my challenge I ended up taking a loss on Friday that we'll talk, well, we actually won't talk about it because it happened through the Monday through New York Kilson, sorry. So yeah, it is what it is. Let's go to the next London Kilson, which is Wednesday London Kilson, and we'll see what we got through this session. Dinner is over, so let's continue with our video. London on this day specifically, we're looking at it from the 5. Just by looking at this, I can understand that there was nothing that I could have taken advantage of. Fair value gap, sorry, not fair value gap, run and buy liquidity, fair value gap, market shift, maybe inside of this I could have looked for something, but basically it doesn't happen through London. We're not gonna waste time on this, and let's move on. Right, let's just move on to Thursday. Will be our next day, and this is actually a trade I participated on. We'll show that later. And I don't tend to trade London. In this day, I actually woke up around 3:30. 3:30 had literally nothing. Well, sorry, 2:30. 3:30 my time. 2:30 we were here, so we had literally nothing, just an impulse. Maybe the price already back into that and given us something, but basically at the time it was nothing that we could have actually taken advantage of. And I basically went back to sleep and woke up literally when this was going on and decided to take it on paper trading. Trade that I would have definitely traded on, as an example, my challenge, if it would have happened through something like New York, right? But it didn't, and it is a shame. Actually, market shift. So let's analyze what we have through London. Turn around and buy some liquidity before actually getting into the London kill zone, right? Run and buy some liquidity. We also have the fact that this little bit of a couple of highs have been taken as buy some liquidity as well. Aggressive move lower, market shift, fair value gap, and this generates this tiny bit of a thing that we can actually use to see if it gets to that and it does anything, right? Theoretically, at that point, we could say we have step 1, 2, step 2, step 3, and theoretically 4 and 5 on the lower time frames, which we'll analyze in a second. Bullishly, at this point, I was kind of convinced that maybe we were changing direction, taking this as buy side, 15-minute market shift, mitigation of fair value gaps, and just take it buy side, going lower, and so on and so forth. That's what I was looking for. Oh, this is actually Thursday. Then yes, that's exactly what happened. I was seeing a lot of reasons to go, to go bearish, right? A lot of buys that could have been taken and that's just being respected. So I was interested in the sell side, aiming for sells, and as we'll see, what else do we have here, which is what I actually traded. Move higher, run and buy sell liquidity, aggressive move lower, retracement, aggressive move lower, market shift. Fair value gap right here, and yeah, let's go to the 1 minute now. On this one, which is not something that I was interested on, I didn't really like it that much. Buy side liquidity, in my opinion, was bare minimum. Market shift was fine. Fair value gap was fine. Lower time frame was fine, although a little bit too aggressive for me, but good enough. But this is not something that I was interested in taking advantage of, but we'll see what happened. We see price doing this step 3, price just trading back into the fair value gap. Step 3, aggressive move lower. We have a market shift already, in my opinion, on this low, or just going all the way down to that one. All happens at the same time. Ideal fair value gap is all the way up on this one, and theoretically we should be executing on this one, but our stop was all the way up there, so that would have been a much less risk to reward ratio. This was the trade that I did not participate on. We have a bad risk to reward ratio, first of all, that I don't really enjoy. And the fact that, again, the fair value, the 5 steps on that one, I was not really that interested about. And I think that I didn't like the risk to reward ratio because I was looking for the 50% of this entire move. Yes, which is actually barely 2R, right? So for me, it would have been putting my entry higher, which could have been mitigated maybe and given me the 50%. Sorry, the 4R before the 50% target. But thing is that I was not interested in that one. But as you can see, 5 steps still works out as a really good trade, depending on what we were targeting. Now we have 5-minute market shift. Sorry, 5-minute run stops, 5-minute market shift, fair value gap, price trades back into that. And this is what I call definition of perfect, right? This and Friday's trade. Price just immediately, right? Buys a liquidity, market shift, fair value gap, price trace back into fair value gap, market shift, fair value gap, execution. The definition of perfect, based on my 5 steps, of course. Just a lovely trade, right? This is actually that I took something that I took on paper trading. I'll show it now. I can't show it right now because on on replay bar we can't see it, so we'll see it just in a second. And it was closed actually higher than this, close to 4R, somewhere around here, because I woke up around this time and realized that the entry had worked out quite well, and I actually hadn't chosen a target, so yeah, missed out on this little bit of a move here. But again, as it was paper trading, it's not something that really worried me that much. Let me check if actually price respect this entry. Oh yeah, theoretically, yeah. Okay, look at that. Beautiful. Already with this drop lower, that is, the price actually latest goes lower than that. We have a 16R, but of course it's not something that we're traded, so let's leave it to the 4R that we've been really happy with. And that means that that's already another 4R on Wednesday, right? Just closing again, just as I showed in the video, just 4R. Sorry, this is Thursday. Nothing on Wednesday. So now let's see Friday, which was an amazing trade as well. Although the lower time frame execution would have been a little bit more complicated. Let's see. Actually, since it's Friday, let's just close this, right? And let me show you the execution on this one. I was going to pull it replay again, but definitely not worth it. Right here. That's the execution, right on that candle. And again, as mentioned, the close was there, which was again 3.80 something R, something like that. That's on this week, in my opinion, only trade they could have actually taken on challenge. Well, no, not the only trade, because now we have the Friday's trade. But as it happened through London, there's really not that much that I can do. So this is London's Friday's Friday. London's Friday? Friday's London? Yeah, Friday's London. Run and buy some liquidity before the session even opens. Quite clear run and buy some liquidity. Aggressive move lower, immediate market shift, immediate fair value gap. Now, let me use replay again, so we look at it a bit better. Trace back into the area, so that's our step 3. And we have 1 minute taken by some liquidity above this couple of equal highs. Not equal highs, sorry, this couple of highs. Somewhat of a trend line, right? we have our market shift right here, and as usual, entry theoretically will be down to this low, right? Why exactly on that fair value gap? Because it's the closest one, the one that we have, well, the closest one, right? The one that is the most close to us. Problem with that was, first of all, risk reward ratio. Ideally, we would have been aiming below those couple of equal lows, so that's just barely a 1 to 1.76. So definitely not ideal. If we wanted to be more aggressive and think the price was actually going to go lower than that, it's, again, aggressive, but let's see. Could have we taken those equal lows, which are a little bit further away? Yeah, this is something that we could have targeted. Again, still 3.42R. Could have we said, okay, so 3.42 is close to 4R, so let's just put it on 4R and see if we get lucky? Yeah, but it would have been a complicated target, so that I don't think that would have been my execution. I think I would have liked going up to this one, being that a much better risk to reward ratio with a much better stop loss. And now if we aim at this couple of equal lows, we have barely 3R, but that's fine because at 3R we're closing some partials. And then we have this low that we were discussing earlier, which gives us 5R, so that means that at 4R this would have been closed at some really good profit. Again, we're just looking at what the 5 steps gave us, right? As an example, Thursday's trade is the only one that I can prove you that I actually took, right? I didn't take it on a challenge because I'm not trading through London, right? I didn't explain it. I explained it to my students that through London I woke up at 2:30, then I went back to sleep, woke up basically 3 or 4 minutes before the actual entry, executed it, went back to sleep. As you can understand, I can't take something like that on my challenge account, because if I was to take a loss, or maybe even if I'm asleep and I can't manage to trade, that's just irresponsible from my part, right? I'm not trading responsibly as I should be trading. I'm also tired, I'm asleep, so I can't take that trade. Now, as an example, if those exact same 5 steps happen through near kill zone, or the trade on Monday happened through near kill zone, or the Tuesday's trade happened in near kill zone, that means that this week we could have had, I personally could have had a couple of opportunities. I believe that Monday trade was taken by a few students, Tuesday's trade was taken by a couple of students, even something on Wednesday. No, I don't remember much about Wednesday, so let's ignore that. Thursday trade, I think multiple of them took them, and Friday as well. I do remember 2, might have been more, but I can't say for sure, right? So here again, don't take anything from granted, right? For granted. The only trade that I actually took was Thursday's trade, but the 5 steps is exactly what we're looking at. We're looking at every single trade that basically happened through the London kill zone on this week. And so far we have 4, -1, -1, 4, 4. That means that just by Thursday already we have 12R, -2, that's 10R. If we want to be a little bit more precise, maybe with commissions we took another extra R of a loss, right? So let's call it we're 9R profitable. Then this one, that's another 4R on Friday, just with 5 steps. Not gonna lie, this week I've kind of realized that the London kill zone tends to be a little bit better due to the fact that it doesn't contain the news that New York kill zone has, as usually the news happen 8:30, 10 and 9, basically happen through the New York kill zone at the beginning or maybe even at the end of it, right? Which kind of ruins things, and it's really not that beautiful, right? To me personally, again, I took a loss on Friday, which is a little bit of a shame. Theoretically, if I would have traded every single 5 steps that happened, or if they would have happened through New York kill zone, I would have ended up being plus, we're talking about 12, 16, -2, -3, let's call it. That's 13R taken on the week, minus maybe the loss on Friday, right? I think I should have avoided that loss. Would have been pretty easily to avoid the loss, but me personally, I would have finished on -3R. Sorry, plus 3R, right? Because I'm taking 1 profit, 1 loss. As simple as that. That's pretty much it. Lovely week through London. New York kill zone this week was completely useless, except, well, actually, here we have the 5 steps. You can look them up. Entry is actually not mitigated. And in this one, we do get a lower time frame entry, but the 5 steps don't work out, don't show up. The fair value gap is there, but there's no market shift in the 5 minutes, so there's nothing for us to actually take advantage of. And through the rest of the couple of days, we never really got the 5 steps for us to take advantage of any kind of move, which is a little bit of a shame, but nothing that we could have done differently, in my opinion. So that's pretty much it for this video. Hope you had a nice week. Hope you enjoyed it, and I'll be talking to you on the next one.